Hello everyone, in this video I want to talk about the new version of our bot which is nearly ready. I am currently preparing the stable release so that I can deliver the updated version to our clients. Today we will go over the details of this new release. Let's start with the back testing. There is a lot to cover, and since I might not be able to fit everything into a single video without leaving some things out, I will cover the remaining points in upcoming videos. For now, let's look at the backtest and see what has changed. I have already migrated and prepared the code from the backtesting environment to the live bot. In the previous version, the code was around 5,000 lines. Now it has reached about 10,000 lines. Let me explain the changes made in the backtesting. Here we can see the 3-year performance and how the balance grows over time. I did reduce the profit per trade, and I will explain the reasoning behind this. Over this nearly 3-year dataset, we maintain steady upward profit growth. The core of this update is to ensure the bot can adapt to both bull runs and bear markets, allowing it to operate dynamically and with greater stability. We have added several strategic parameters for risk and system management, focusing primarily on making the bot more resilient in both market phases. In the previous version, positions could sometimes remain open for too long during extended bull runs or bear markets. To address this, I integrated a weekly EMA and a weekly RSI. I might not have enough time to cover these mechanisms in full detail in this video, so I will dedicate future videos to them. By default, the profit on standard allocation will be lower, but you will have the option to increase your allocation if you prefer higher returns. I also want to outline our future plans. Anyone who is currently a client with a full package will, of course, receive these updates automatically. Let me explain why I reduced the target profit on the ladder system. My goal is to keep the primary ladder system, which is already functional and familiar to us, as our main foundation. I haven't removed the full modes just yet because the right opportunity hasn't presented itself, but I will disable them once the current positions close. The target profit was lowered to reduce overall margin usage. This first system will trade exclusively on leading assets. The second system is still in the testing phase. It is not yet stable enough to be released to anyone. Currently, the update only applies to the ladder system, but we plan to integrate 2 new strategies in the future: the whales, smart money strategy, and the contrarian strategy. With the whale strategy, we align our trades with institutional players when they move against retail sentiment. In the contra strategy, if the market forces are balanced, we open positions in the opposite direction. Combining these 3 systems allows the ladder setup to use less margin, while diversification is achieved across the second and third strategies. Even if both systems trade the same asset simultaneously, such as Dogecoin, they won't interfere with each other. Right now, all 3 systems are being tested on a demo account. Initially, the whale strategy showed weaker performance compared to the second one. The trades weren't necessarily bad, but upon launching, I realized it needed additional filters and some bug fixes, which have now been resolved. The whale strategy is more aggressive, featuring a 16% take profit target split into 2 partial take profits. To sum it up, this is the current plan. I won't go into deep detail about those 2 systems just yet because they require more work before they are stable enough for deployment. However, we do have backtesting results that I can share with you right now, which include both the whales and contra strategies. Looking at the backtest results, I found the contra strategy to be particularly promising over the 2-month testing period. I chose the second version of this strategy. While the first version might look more profitable on paper with a slightly lower drawdown, the second option feels much more stable. It avoids overly aggressive take profit targets. For effective diversification, the contra setup needed to be more conservative, which is why I went with the second version. It generated a 25% profit over the 2 months. The back tests were run on an engine that closely mimics actual exchange logic, making these results highly realistic. You can see the individual trades here, including the losing positions. However, the core concept is that the take profit target is high enough, around 14 to 15%, to easily offset several consecutive losses. This is the outcome of the 2-month test. Later, I also tested this strategy on a separate 1-month dataset. Since acquiring high quality historical data like this is challenging, I evaluated it across a total of 3 distinct monthly periods. This specific month was characterized by a strong downtrend where the entire market was falling. Under these conditions, the contra strategy performed exceptionally well. A total of 53 trades were executed, and this approach proved highly profitable during that period. As for the whale strategy, it yielded nearly 22% on the 1 month dataset. We also have the 2 month backtest results here, showing a 28% profit. As mentioned, this is a more aggressive model. You might experience several consecutive losses, but with a 16% take profit target, a single winning trade offsets roughly 3 losses. Additionally, the bot features a break even function. When profit hits 8%, the stop loss is moved to entry, protecting us from taking a loss. While the win rate may vary, the larger payouts on winning trades ensure a strong overall performance. Both the Contra and Whale strategies showed profits on the most recent 1 month data. The code has already been deployed to the live system, and I am actively monitoring its performance to ensure everything runs smoothly. The plan is as follows. The ladder system has been updated, and we'll integrate the 2 new strategies later on, though I am not releasing updates for them just yet. Existing clients who purchased the previous version will receive the new, updated ladder system at no extra cost. Over time, as the new systems are finalized, they will be rolled out as part of the full package. Now let's briefly look at what has changed specifically within the ladders. I will discuss this in more detail in other videos, but here are the key updates. To identify market trends, we integrated a 50 EMA to differentiate between bull runs and bear markets, enabling the bot to adjust its behavior based on the current market phase. We also added a weekly RSI and slightly adjusted the scaling factor during configuration generation. Here is how the bot distinguishes between bull runs and bear markets. On the weekly time frame, our macro system, when the RSI drops to 35, long positions do not activate immediately. Instead, the RSI must recover back up to 50 to trigger longs. This signals the start of a bull run phase. Conversely, when the RSI reaches 80, indicating a highly extended trend, short positions are not opened right away. The RSI must pull back to 60, which serves as our bear market confirmation to activate shorts. This cycle repeats dynamically for each trading pair. Additionally, the 50 EMA is used for profile inversion. When the trend shifts, this indicator reverses the positions and adjusts the profiles accordingly. Regarding the profiles, we have completely removed the 1 minute time frames. They were overly aggressive and caused execution bottlenecks during high volatility bull runs and bear markets. Our hybrid RSI models are also worth mentioning, though they do not open positions in the opposite direction. Their purpose is to temporarily ease exposure and prevent the system from adding unnecessary ladder levels on one side. Additionally, a take profit boost has been introduced in the hybrid mode. The bot aims to lock in higher profits within specific RSI zones. If the system is operating in hedge mode and trading in both directions, take profit scaling is adjusted on the side that is under more pressure. Furthermore, if a single trading pair in the portfolio incurs high risk and drawdown, other profiles will automatically reallocate resource focus to assist that struggling position and reduce its overall exposure. This is managed by a specific risk allocation formula that consolidates exposure to manage drawdown during critical market events. In short, the bot is now much more robust. With numerous built-in mechanisms validated by backtest, let's look at a practical example of how the weekly RSI 80 and 60 thresholds function. For instance, Ripple XRP experienced a highly aggressive rally, pushing the RSI to 80. If we had activated short positions immediately at 80 on the weekly chart, the bot would have opened trades while the upward momentum was still at its peak, right before the price rallied another 100%. This would have locked up margin far too early. That is why the initial signal at 80 only prepares the system. Shorts are only triggered once the trend shows signs of cooling down and the RSI drops from 80 back to 60. The bot starts shorting in this specific zone while trading long positions up until that point. This mechanism protects us from opening premature short positions during strong upward momentum. The same logic applies to downtrends. Once the RSI hits 35, long positions are only initiated when it recovers to 50. This serves as a highly effective approach to managing bull and bear cycles, giving the system the ability to self regulate.